Okay.
So yeah, whether you realize it or not, every day you step on that front line, you run the risk of missing one of those deposits or somebody coming to try to bribe you, Danica, like, I'll give you $300 if you take this $20,000 deposit.
Well, I
Mm.
don't deal with cash, so but yeah, I'm on the account side.
Oh, okay.
Yeah.
Well, that helps a little bit. Uh, but whoever's dealing with cash, dog eat their lunch then.
Right.
Okay? So maybe when you're done with the risk session, you can go over them. I just did a risk session. Let me tell you, don't mess with that. I'll tell you something else. Wire fraud is very common.
It
Throughout
is.
the pandemic, it is quadrupled. Wire fraud. People wiring money all over the place, in and out, back and forth, doing all kinds of nonsense.
Yeah. We had a
Yeah.
customer recently. She wired um money to this man in Africa who's just she was going to marry and
Yes.
it was
It,
fraudulent.
it's flicking called romance fraud.
Mhm.
And why is it that women, young and old, get caught up with that nonsense is beyond my wildest dreams. So many women, some men, but so many women keep sending money in the middle of nowhere, thinking that Tom Jones is actually going to marry them. And if
Mhm.
he's going to marry them, why does he need the money up front? Oh, I need it for a plane ticket to come to where you are. Because over here in Africa, things are not so good, eh? But you send me the money and I will come and be your slave. How's that? And so she sends it, thousands of dollars sometimes, never to see it again. It goes into the abyss. Indeed, it's called romance fraud. Just one of the many, many, many types of frauds that are affecting individuals and institutions every single day. I saw a case not too long ago. This company was averaging some maybe $20,000 a week in sales, but their deposits were like 99,000 every week. Anybody knows where the rest came from? We don't know. But if the average sales are 30 and the average deposits per week are 99, I don't know where they get 99 from even. Nice clean numbers. All the deposit bills are hundreds. Who the hell runs a little store with $30,000 in sales and then they make deposits of clean hundreds and fifties? Anybody knows? Seems strange, doesn't it? Hmm. Well, Danica, thank you for saying that you have no risk and then saying some stuff to suggest there is risk. And then say, thank God I'm not directly involved with that. But yep, you're in that environment. And whoever's on that front line, they need to be extremely careful. Whoever's in the wire transfer department, they need to be extremely vigilant.
But yeah, that's me. That's me.
Oh yeah. So Danica, you have to be extremely vigilant. When things come across your desk, stop and look at it and say, what the hell is this? Like that. Anything that looks unusual, like what the hell? Don't let anybody push it. Danica, do this quick, quick, quick. So I'm not. So then you can say to yourself, okay. No, you say to them, okay, and then to yourself, I'll be damned if I do it quickly. See? Because you need time to do what, Danica?
Look over it.
Absolutely. Because if you don't do that, you run the risk. See that flicking word again? Risk of wiring some funds and being part of any number of illegal activity just because of that wire transfer. Because that money that is being wired could be for a number of reasons, like money laundering, like embezzlement, like trafficking of children. How's that?
Yep, you're correct.
Trafficking children, little itsy bitsy children. So yes, no such thing as just a wire transfer anymore. That was in the old days when you wire transfer money to the university or something to send your children to school. We still do that, but there's some other interesting wire transfers that need to be scrutinized. Okay, Danica, good luck with that crazy stuff. I'm glad it's you and not me.
Yes,
That's
sir.
that's for sure. So if I spooked you a little, good. I want to spook you
No,
so that every
I'm not spooked. I know what to be aware of.
good. That's what I wanted you to say.
Yeah.
I wanted you to say exactly that. I'm not spooked. I know what the hell's going on because if that is indeed the case, then you're good to go. But you'll be interested in knowing that not everybody in your job area in the other organizations are like that. They get sucked in more often than you would think. Hmm, I wonder why. Well, there's another interesting risk issue called bribery. Anybody knows that one?
Yes.
Yeah, bribery. Kiss my foot. Okay, okay. Good luck, Danica. I'm glad you're aware.
Yes,
Uh,
sir.
yes, you'll be fine. Okay. Okay, Nikita.
Present.
There you are, Nikita. Okay. Any risk issues in the last week, Nikita? Or everything looked fine to you?
I'm sure there were, I guess, in hearing others give examples. Um, in one of my functions, I input the dividends and interest our clients receive into our systems. And it's
Yes.
there.
Sorry, Nikita, I'm sorry to interrupt you, but I'm not sorry because I interrupted you on purpose. See those dividend payments? Are they really dividend payments?
Yes.
Okay. Are you sure?
Well, they come from the central bank, so I have some faith there, and they
Okay.
correspond with what we have in our system with what they should receive. So
Okay. Well, that's a nice mitigating factor. So the level of risk there should be minimum because we're assuming that the central bank has done all its what? Due diligence?
it's due diligence. Yeah.
Yeah. Yes.
I was going to say that it was a case where I had transposed the number on the entry.
Aha.
Yeah,
Yes.
but we
And
have
what happened?
procedures in place for our company before something is posted in the system. Two managers have to approve it. So
Yes.
one of them was able to catch it. So
Which is what the risk mitigation process is all about. Segregation of duties and double signatures or triple in some cases. Because
yeah,
any organization that only has one person signing, dog eat your lunch. Okay, yeah. They were able to find it because there are two other people who were looking. Very important. And notice all errors that occur are not intentional. Some of them are real live errors. She just transposed an error. Anybody can do that. Happens all the time.
yeah,
But it's nice when you have a secondary, like two other people who are signing off, looking. Chances are you'll pick it up more than likely. So yeah, the risk, you still run the risk of what? Making a legitimate error and even two people missing it. That happens too.
yes,
Because if one is on the phone, the other one is eating, they could miss it too. I'm
yes,
just using as an example. So yeah, even though we try to take mitigating steps, sometimes we still miss it. But at least we keep it to a minimum if we have those things in place. If we're watching, if what's the name? Danica isn't spook because she's watching. Like, don't try that. I'm here watching. Okay, for sure. All right, good stuff. And the more you keep that mindset, the more you mitigate your risk and keep it to a minimum. We could never eliminate it completely, ever. But we could sure as hell keep it to some kind of minimum, for sure. All right, thank you for that, Nikita. Real world stuff. Maud, are you there?
Hi, I'm here.
Hi, Maud. Any risk issues this week, last week?
No.
No?
Uh-uh.
Wow. That means you don't work in lending then.
I do not.
Okay.
I suspected somebody tried to kidnap me this afternoon on my way home from work.
That's risk. Why you can say no, nothing.
That's not work.
That's okay. This class talks about any kind of risk. I don't care if it's work related or not. We're talking risk. What happened?
What happened is,
First of all, is it the true story more than you just
it's a true story.
okay? What the hell happened?
So as we walked out of the bank, I saw this big white bus pull up in front of the bank. So as a security guard and I walked across the street, it slowed down and parked like right across from me. So we proceeded to walk across the street. So like a minute later, I looked again, and the bus was riding alongside us. So as we got further, he parked. So I stopped. I look at the security. I say, "Wait a minute. Do you think this bus is following us?" And I think he thought I was joking, but I was dead serious. I was watching many movies. So I thought they were going to try to kidnap me. But they stayed there and I got to my car safe, made it home safe, and here I am sharing my experience with you.
That's a serious thing. Why do you think that they may have been trying to kidnap you? Like, what made you suspicious other than just they're just driving alongside?
It was just awkward that, well, the bank is always targeted. Most persons that don't work in a bank, they think that, okay, everyone that works in the bank has access to the money.
That's true. That's
So
true.
we can get the person who works in the bank is we can need the money. So
True.
I'm always guarded by persons' perceptions of bankers.
Yes. No, unfortunately, that's true. They think we all have access to the vault. They think we all know the combination. The fact that we don't know the combination is a great risk as well, because depending on who hauls you to the vault, you said, I don't know, they might get angry and shoot you.
Yep.
Yeah, that's serious, just like on TV. TV is only a depiction of what happens in the real world. So you're probably right. And what is more intriguing about that situation is you did not take it for granted.
No.
See, whether they were trying to run off with you or not, or run you into the bank or whatever, you didn't take it for granted. Your antennae went up, and that's always a good thing.
Yep.
You cannot presume.
No.
Better safe.
I'm sorry.
Absolutely. All right. So yeah, that's not directly related to your job, but it could have been directly related to your job because maybe may have hauled you in, open the door, and take me to the vault. See? So all of a sudden it's related to your job.
Yes.
Yes. Or worse, run you off the hell somewhere. No, let me not go there.
Hold me, it's ransom me.
Yeah, hold you for ransom. I don't need that headache of worrying about that. Okay, so yes, your posture is exactly the posture we should be taking on and off the job. Being aware, being informed, and not taking anything for granted. That's a huge way to mitigate against risk. One of the reasons why organizations and entities and individuals get stuck because we take risk for granted. Somebody said, well, you want me to worry all the time? No, that's not what I mean. But we do need to take reasonable precaution and be aware of what is going on. That's the key, okay, for sure. All right, way to go. Katura.
Hi.
Hi, Katura. Anybody
How are
try to
you?
run off with you today?
Not
Or this is the last
exactly.
week? Not exactly. That's the one I especially want to hear. Not exactly. What happened?
Not exactly, but a couple of weeks ago, I embarked on a small, was not a small business venture. Someone asked me to partner with them.
Right.
And first of all, I did a poor job in mitigating the risk because I didn't do my usual due diligence.
Stop for a minute, Katura. Hold that thought. Why didn't you do it?
Because it's a friend And
Oh,
I
oh,
went
that
against,
problem. Yes.
one of my rules, actually two. I don't get in business with friends and family,
Yes.
and I don't make business decisions on emotions.
And you
But
violated both of your rules.
both,
Shame on you,
yes, because
Katura.
he came to me
Oh, yes.
in
Okay.
desperation,
Yes.
and I said, okay, I asked some questions. Now I'm after delving a little deeper. He wasn't honest about one or two. He told me he had the permits and licenses necessary. Now, after asking questions, after I already made my investment, now I am asking questions,
Yeah,
which is backwards for me.
you put the flicking card before
I did.
a horse. Shame on you.
I did. Because there was a timeline for the lease. He came to me and I just broke every rule. So now obviously I'm gonna have to take a financial loss. I already see that. Two is too much ambiguity with the project. So it's a complete loss. So, but it's on me. So
Yeah.
that's what I'm dealing with.
Yes. Thank
And
you.
I'm beating myself up for it.
Thank you. Thank you. Thank you for sharing that real life risk issue, because that affects people every single day. Believe it or not, you are not the only victim. You are one of thousands per day who fall victim to that same stuff. Putting the
That's not me
card,
though.
which is worse, because I realize that, and the fact that it's not you begs the question like, who the hell could have possibly come to you and take you out of your normal mode in all relevant categories, especially the money side, Katura?
Yes, Mr. Wilkinson, I'm trying to figure that out.
Well, here's what I've done, Katura. I put a little asterisk towards next to your name so that when I'm ready to pull my first stunt in my life in decades, I know exactly who to approach. As I'm calling Katura and give her a sad story.
Oh, I don't like that. I don't
Wilkinson,
like that
and
at
I'm
all.
about to be devastated, Katura, if you don't do something quickly. The lease is
He
running out.
thanked me.
Yes, he did. But this is somebody you trusted somehow, somewhere.
I did.
I know. They're the
Yeah.
worst of the worst. And here's what makes it even worse, that you trust them, they violate the trust, and see, risk everywhere. Risk, 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 risk. And they make it bad for who? Someone else who could really benefit from it, something like this in the future. Correct?
Yeah.
Because the next person who come to you, no matter how honest they are, you're going to send them to CID, SIB, the ringer. Correct?
Yeah, I will. I
Indeed.
will.
Thank you. Thank you for sharing that. I hope the loss wasn't too significant. God forbid. In any event, uh, you know that you should stick to your guns in future. Because had you done your normal stuff, see, some people are just pure ignorant about what to do. They don't know. You knew. And
I
you
knew because I
that
asked about a business plan and everything, and I just knew. Let's move on, Mr. Wilkinson,
I
because
know.
that's upsetting.
I know. That's why I kind of hung around it like a fly, so that it could stay on the forefront of your mind. So the next person entity that tries to mess with you with that, you say you will do what you should have done, correct?
Yes,
Way to
sir.
go, way to go. Thanks for sharing that. I'm sure some of your colleagues are the beneficiaries of that particular situation, for sure. All right, who's next? Kayleen. Kaylin is not with us again. And then last but not least, Tamar, are you there?
Hi, good
Tamar.
evening. Hello.
Hi, Tamar.
Hi, good evening. I'm
Good
here.
Okay, great.
Yeah.
I noticed that your financial institution was voted most something recently.
Top in customer service. You think this-
Uh, so most something that you guys were starring again as usual, and some.
Yeah, that's kind of normal for us.
So I noticed. I
That's my
like that.
little plug. But
So,
uh-huh.
uh, Tema, what makes you guys so extraordinary then? Since you threw that in there, what makes you guys so strict? What's the secret?
Well, I just speak personally. I've worked at 3 financial institutions.
Okay.
And what I can say is when it comes boils on a customer service, one of the banks I worked at, they had this slogan that says, it was RBC. It said RBC is me. And even though I transitioned to 2 other banks since then, I always take that with me. Wherever I plant my feet, I am a replica of that company. So you have to own the good and the bad. And when you have a dialogue with clients, it's not that you give off that we are the best, but I think you have to kind of reassure them that I have your best interest at heart, and that you have to actually earn that trust. So personally, and I quite recently actually, I ran into 2 of my clients from other banks that I worked at who saw me on the street, and they were like, "Hey, I'm interested in a loan." And I think we spoke about this before in one of our classes, but persons don't always move around just because of interest rates and the
Right.
benefit of what the product offers, the features. What
Yeah.
I've proven is most times, if that customer service is top tier or you build a rapport with that client and they can trust you and they trust your judgment, they will move for the same interest rate, but because they know they can call you at any given time, and then like you're gonna follow through with their request or propose the best solution for them for their need, they will definitely sign on a dotted line. So maybe First Caribbean has many persons like me, and that's why we are always on top when it comes to customer service.
My. Thank you very much for that. Clearly, something is going on there. Clearly, something is working there because you guys are always somewhere starring in something with regards to service or presence or longevity or whatever the case might be. So, whatever it is, apparently it's working. Somewhere, certainly, it mitigates the risk of losing customers. Bad service. People will take it for a while. They'll complain for a while, and then when they leave, oftentimes, most times, they don't tell you they're gone. You don't miss them. You won't know until you start seeing your numbers and loans and operations, whatever the case might be, start to drop. Or they may leave their account there with $10 on it, just don't come back. Okay. And oftentimes, if you're able to find them and say, well, what happened? They'll tell you the service stinks around here or something like that. So, yes, yes. And we all know the customer is still king or
Mhm.
should be. Without them,
It's
those
all
huge
about
profits that we make, yeah,
them.
okay, certainly will not be there. So, yeah, way to go. Do you experience any feelings of being at risk in the work that you do on any given day? Tamar?
Well, in the field I'm in loans, so we assess risk every day.
Oh,
uh,
yeah,
from the interview straight up to the very end.
yeah,
Um, I'm actually right now I have an assistant that she's actually going to training and she is new to credit. So we always have recaps after our training. And we went over this week, we went over the 5 Cs. And I guess she was thinking, oh, so once they have collateral, then they're pretty much good to go. And I'm like, no, you have to factor in all the 5 Cs. So when a client comes to you, even though you're not making the decision, when you're presenting an application, you have to do the assessment first before you even forward on to the other person who's going to sanction that loan. So you are like a risk officer yourself. And it has to make sense, like Ernst said, it has to make sense. So if you see any gaps in your interview notes, then you have to ask those questions, because more than likely, when you forward it on, the next party is going to pick up on those same questions and make you look like you didn't ask those questions when maybe you did, or you could have missed it. So
Indeed.
we assess risk every day. So like you say, it comes with experience, and you will know when those little red flags, you know, they present themselves, and then you can just stick a pin there and say, let's dig deeper into that to kind of get a better understanding of the client financial position.
That's the deal. You'll know in time and over time what the red flags are, and the key is acting on them. A lot of people recognize red flags, but for some strange reason, they oftentimes do not act on them. And oftentimes the reason is not that strange. Sometimes somebody just flicks them a few bucks to ignore the red flag, or some other promise of something to ignore the red flags, which some people actually fall prey to and run the risk of putting themselves in jeopardy within the work they do. But yes, that risk management, especially in the credit department, as in every other area, has its own unique kind of risk. You have to always be vigilant. Every customer is different, no matter how similar they might look. Every loan proposal is different, no matter how similar they might look. So yes, I don't envy you guys. I used to do that stuff decades ago, and it was interesting then when everything was manual and the good old days were the good old days. But things have changed. Things are, as much as they are different, they remain the same, but the spook level is just as high, and maybe in some cases higher. So yeah, good luck to you guys with all that risky stuff you're doing. Right? There are still some loan officers out there, for example, who think that giving a loan does not present a risk. I hope there are only one or two of them in the world, because everybody in credit is taking a risk. Anytime you lend money to somebody personally, you're taking a risk that you will not get it back. Okay, so good luck to you guys out there as well. All right. So yes, whether we realize it or not, every day we are surrounded by some form of risk. All right. So then let's just chit chat a little bit more about some things that are out there, so that when you see them, feel them, touch them, hear them, is, oh, that's what the hell it is. And you try to take steps based on any information you have in your repertoire to help you deal with it. That's really what this is all about, just throwing out stuff, information, so you can tuck into your repertoire in the event that you need it. You can pull it out and hopefully make some applications along. All right. Don't forget, I have something about 15 minutes before we end class or something. There's a little excerpt that I'd like to introduce you guys to in terms of risk. It's off context, but I think it's a rather interesting thing. So remind me to let you have a look at that. All right, let's go back to the slide that says monitoring and review of the risk management process. I think it's 15, if I'm not mistaken, where it says that if risk management is going to be effective, there must be a reporting and review structure. Structure means not when we feel like it. Structure means on a consistent basis, not on and off, not now and then, not depending on our mood, none of that stuff. There must be a reporting and review structure so that we can identify the risk, as we've said, assess it, and then put certain controls in place. That situation where the transposition took place, the fact that there were other people checking it, signing it, reviewing it, that's a really practical and common, should be common anyway, control measurement to minimize risk. If that was not in place, whatever that transaction was would have been lost, perhaps. Remember also, a transposition is an error that can happen with anybody, and depending on the nature of the transposition, where that zero is, that can take something from thousands to millions potentially in terms of the amount. And if you don't catch it and it goes, you may never be able to find it. I saw a case not too long ago with one of my clients. They called me because I kind of do like small, medium-sized business consulting. And I got a call from a client about a wire transfer, no less. See, wire transfer, then Danica. There we go again. They were doing business with this company abroad, receiving emails from the company and making arrangements to wire funds to the company. The first wire was about 40-something thousand dollars. The second wire was for another 40-something thousand dollars. And then when they tried to get a confirmation, email confirmation, they discovered that they sent the money to not the originating entity, but rather a fraudulent one. The fraudulent email looked very much like the original email until you looked a little closer and you saw some discrepancies. So by the time that was discovered, and my client called the bank and say, stop those bloody payments, it was too late. They were gone into the abyss, and the bank had no way of finding out where it ended. So,
Mr. Wilkinson,
yes.
that sounds like one of our customers.
Do we share a common? Let me see. I'm just looking to see who said that. Oh, yeah, then Danica. Danica, you never know. Life is full of ironies, but it does sound familiar, doesn't it?
Very familiar.
Because these things are not uncommon. That's what I'm trying to tell you. People are always out there trying to scam you. Hacking, fraudulent email, fraudulent wires, misfiring of wires, interception of man, they're doing all kinds of things that they can think of. All I can do is tell you the risk is real. And sometimes you don't feel it until after it occurs. And of course, depending on where it occurs, you don't hear anything about it either. The institutions just kind of write it off, cover it up, and say nothing about it. Doesn't mean it's not happening though. Sometimes it's even in the millions of dollars. Okay? So yeah, Danica, you can identify that wire transfer crap. Absolutely. And that's just a case of it went where they thought it went until they discovered it didn't go where they thought it should have gone. And by the time they get back to the bank to put a stop on it or to trace it, it was too late. $90,000 plus gone in a moment, in the twinkling of an eye. My. Talk about appropriate controls. Even right down to making sure you check to see where the money is going. That is not an inappropriate procedure. Nowadays, that is a quite necessary procedure. Some institutions have a callback feature where they send something, some transaction is supposed to happen. It's okay, fine, we'll get back to you, and they call to verify. And sometimes when they call to verify, the person who verified before is not the same person who they're hearing currently. All kinds of strange things go on. And if you are not vigilant, you will heighten your risk to proportions you cannot even imagine. Okay? So maybe to a huge company, that $90,000 would be immaterial, as we say in accounting. But for a small to medium-sized business, that is a huge and significant loss. Okay? For sure. It's even possible that part of that may have been an inside job, Danica. Did you think about that? Are inside jobs possible? Anyone?
Yes, they are.
Always. I'm sure you guys are familiar with KYC, yes? Know your customer.
Yes, no, you're kind.
Yeah. There's also something called KYS. What's that? Know your staff. Because not all staff members are trustworthy. Some staff members in some organizations are always looking and reading and planning. Some of them are getting away with some stuff already that we don't know anything about. They just have, it hasn't come to the surface yet. Happens all the time. So not only do we have
Mr.
to talk,
Wilkinson,
yes,
I don't know if you heard in the news about the Atlantis Casino, the dealers. We had
Tell
some
me.
dealers steal a substantial amount of money from
Yes,
us
yes,
through Scotia Bank.
yes,
And I keep telling them the amount of money that they were moving, over 10,000 sometimes, they had
yes,
to have been working. There had to have been some internal help.
yes. It's called collusion.
Exactly.
And collusion is one of the greatest risks that an organization faces because collusion has a way of working around even the best internal controls. Because no matter how good your internal controls are, when people on the inside decide to collude, they know how to move around the system. That stinks. And so, yes, no doubt about it. Okay? So a lot of times when these things happen, it's important to consider whether it's an inside job or not. Because it is possible that that institution I told you about, sorry, that there may have been somebody on the inside who colluded with the company and say, hey, I'll make arrangements for the payment if you could make arrangements to intercept it. And then when you get the money, send me my share to this account. True or false? True or false?
True.
True. Somebody who's bold enough to say true. Ah, yes. And certainly that casino deal, more than likely, it is not uncommon, especially in those environments as well. Okay, Katura, for collusion to exist. Lots of money floating around in bloody casinos. And so persons are always planning with all the cameras and lights and check this, check that. Everybody get naked coming in, get naked coming out, checking, whatever. Whenever there's collusion, collusion overrides all those checks. That's the problem with inside jobs. They pose perhaps one of the greatest risks of all. And so now companies have to now add another risk mitigating factor, and that is how do we detect collusion? My. When people get together and plan it together, internally and or externally together. My. So yes, regular audits help, updating the policy helps, all these things, checking the performance of what is required from staff members. These are all things that we try to do to mitigate risk. And people are still finding and planning ways to get around it, especially where money is involved. My. Okay, yeah, some food for thought. And while we don't stay up at night not getting our beauty nap because of it, we certainly cannot ignore these things from day to day. We hope we not become a victim, but anybody can become a victim. Anybody, any entity. Happens every day as we speak. Okay? So, what kinds of things, broad-based, can we do? I may have mentioned them last week. There should and must be a risk management policy in your company. If you don't have one, somebody needs to prepare one. And people need to be aware of what that policy is and what it says where you work. There must be board involvement. The board does not support it. Keep checking it, keep asking for feedback about it, keep looking for ways to improve it. It will not work well. Because all the reports coming from compliance and risk management about stuff that the board is not actively involved with it, you don't get too many results, which is a big problem in some entities. Boards are not as busy dealing with risk management issues as they should. And part of that is because some boards are the problem. Kiss my foot. Could that be? It could, and it is. Okay. If you have branches here, there, and everywhere, it makes it more difficult to control the risk in the outskirts in those decentralized areas. So your business units hopefully has somebody in it who can risk mitigate. If you have branches here, there, and everywhere, and there's nobody in there directly, and everybody is waiting to get the word from head office, so to speak, some interesting things are going to go down, and not all the risk mitigators are going to be in place. By the time head office steps down from the throne with a decision about what to do, all hell may have already broken loose wherever that particular unit is, or branch, or entity, or subsidiary. You cannot manage risk without the proper resources. You need people, they need to be trained, they need to be retrained, they need to be updated on a regular basis, and then they need to have the ability to implement whatever the policy requirements are. And then, of course, without a second stage check like an internal audit process, folks are going to get away with more than they should, or they will miss. Remember, not all risk issues are the result of fraud, theft, and other deliberate acts. Sometimes people make legitimate errors. And so if systems are not in place to check them both, companies lose money, resources all the time. Okay? I think the Central Bank of the Bahamas has just updated its internal audit rules for financial institutions. And part of that reason is to tighten the role and function of the internal audit process with the hope that companies and entities will better mitigate their risk within the organization. Because regulators have discovered that despite all the on-site examinations and all the other things they try to put in place, persons are still looking for ways to get around the system. And by trying to get around the system, risk issues are enhanced. Reputational risk is increased. And all this kind of stuff. Credit risk is increased. And so the internal audit process has now been enhanced by the Central Bank of the Bahamas and Securities Commission. And there's certain regulatory requirements that must be done from an internal audit perspective in an effort, again, to minimize risk. Okay? Remember, when an organization, a financial institution in particular, fails in the Bahamas, it's not just a black mark on the financial institution, but it's a black mark on the country as a whole. And let's not forget, the OECD has not gone away, despite the war in Ukraine. FATF has not gone away. CIFP has not gone away. World Bank is not, none of them have gone anywhere. And they seem to be watching the Bahamas for some reason. I don't know why the hell we are so prominent in their minds. But I do know, but why? Considering that all those major countries are doing 10 times more interesting things, but that is the case. And so our regulators are constantly looking at risk reduction issues so that we could try to maintain our reputation, see, as a financial center. I hope that we all know in this room that banking is our second major industry behind tourism. And so we have to do everything that we can to protect it. Okay? That's why we have these sessions, these certifications, these classes, these training programs about risk and AML and CFT and all the other issues that we do. Because it's a matter of not only risk mitigation, but a matter of reputation for the country as well. Okay? So if you look at that lady who's drawn those circles, notice in the middle, she puts the common denominator, risk, and then on the outskirts are some things that we can do with risk. It's interesting that we can do these things both on an organizational wide level or an individual level, entity or individual. So what are the 4 things that we can do with risk that we should always be thinking about one way or the other? Okay. We can accept it, suffer and do something about it, or suffer the consequence. We can avoid it and suffer the consequences. We can transfer it somewhere else, or we can find ways to reduce it. The one or the method that we choose will determine the nature of our individual outcomes. Okay, sure. There's something to think about. Accept, avoid, transfer, or reduce. All right. So now we get a little more involved with some individual issues concerning risk. Okay, like, what is risk again? There are all kinds of definitions for risk. How do we control it again? What is the scope of risk in our organizations? Is there a risk management cycle? And if it's true, how does it work? What are the different classifications, sources of risk? Business risk, financial risk. The list goes on and on and on. How does risk management issues affect profits and the ongoing business activity of any particular entity? So questions keep swirling around risk. And it doesn't make sense getting bored with it, because getting bored with it, it's not going to change anything. The more bored you get with it, the more you're likely to make mistakes, cost your company money, cost yourself your job, cost the country its reputation. It all depends on the situation. So this is very serious business. All these regulators that we have in the Bahamas, central bank, the Securities Commission, the Compliance Commission, the Insurance Commission, the bloody FIU, all these regulators are there, and they all have counterparts all over the world doing the same thing to try to manage risk. One of the biggest challenges that regulators are finding presently as we speak is looking for ways to get companies, entities, financial institutions to actually look at their risk issues and write them down, identify them, put them on paper, and say what you're going to do to fix them. Those that you have exposure to, and those that you cannot fix completely, how you're going to manage your residual risk. Big old issue presently. This is not historical information. These risk management issues are current. Okay. Somehow, a lot of persons in financial institutions don't realize that risk emanates from things like the products they offer their customers. For example, if you offer customers a debit card that they can draw money from anywhere in the world without any restrictions, then people can use that to launder money. So that product all of a sudden becomes a risk issue because of the nature of that product. Where you do business is another risk issue. You do business in Venezuela? Really? Why? Russia, where Putin is? Why are you doing it there? China, where nobody ever says anything. They're quiet about everything. They're in everybody's business, but they don't tell you anything. These are real geographical issues. The Middle East, where nothing is settled. All right. So then, before we go any further, let's look at a couple of terms again that we may have heard before, but not all of them. First of all, let's look at risk management again. What is it? Notice the words that are used here. Risk management is about, see that word? Coherent. person, in other words, have to be clear, not muddy, clear. A coherent and balanced assessment, not imbalanced, not leaning to the left, leaning to the right, I think, sort of, kind of, coulda, none of that stuff. It has to be coherent and balanced. And there must be some situation in place to treat any potential risk that your firm might run into. Because there's always uncertainty. There's always the risk that a client will try to bribe an employee, that employees will collude to defraud and embezzle money from the company. These things are very real. And even though persons sometimes get caught and go to prison occasionally, persons are still always looking to collude and do all kinds of other crazy stuff, thinking for some reason that they'll get away. Truth is, some of them do get away. Sometimes they get away and you never know. Sometimes when you find out they are long gone. Sometimes when you find out they may not be gone, but the money is gone. So that's what the coherent balance treatment issue is all about. Then it's important to know what certainty and uncertainty are. We all know that. Okay? Certainty, we all know, is a lack of doubt. We're sure. Uncertainty, we're not sure. And those two things hang around in the middle of risk management and risk. Okay. On the top tier, we have risk management and its coherent nature that's supposed to be. At the bottom, we have risk, which is some variation in whatever might happen. We're not sure. And in between, we have certainty and uncertainty, whatever they might be in a risk environment. Okay. So welcome aboard the Titanic. Because risk could be that way. You never know when you're going to hit an iceberg. And all the things we have to do every single day is to help us avoid hitting an iceberg. Wow. Notice the little note that I put under risk management and insurance needs. I said, risk and uncertainty will be with us until the day the future is certain. The future will never be certain unless you know something I don't know. It hasn't been so far for the last 6,000 years of man's known existence. Very unlikely it will never be. At least not until Christ comes. He's the only one that can recreate certainty. But in the current environment, it has never happened and not likely to happen. And the sooner we understand that in the things we do, hey, the better. Okay? So we're always exposed to risk, and we're always exposed to loss, and we're always looking for how to minimize them. And when necessary, try to calculate and determine the amount of the potential loss. That's the other thing. How do we stop it? And if we can't, how do we try to estimate our losses? And so I have a little equation in there which says if you're trying to determine the value of your potential loss, whether an insurance company, other financial institution, then there's a mathematical way, simple way you can do it. You don't need algorithms necessarily to do it. All you need is a definition X, which is your potential loss. And then the letter P, which is the probability of that loss. So what does that mean? If you are believing that you're going to suffer particular, and again, for many of you, this perhaps may not happen at your level, where you work every day and worry about what to balance and how much work to get out, how many clients need to be dealt with. A lot of this stuff is probably happening somewhere up the ladder. But it doesn't mean that persons down the ladder shouldn't know, because the risk of loss occurs down the ladder as well. Okay, that's for sure. So if we're trying to come up with a dollar value, well, it's never going to be an accurate number. You try to guess in any particular situation what your potential loss might be, God forbid, maybe based on history, based on the circumstances around the work you do, whatever it is, and then you try to say, okay, the probability of that loss based on past experience is 30%, 10%, 80%, whatever the case might be, and then we try to come up with a dollar value. Okay? Again, that's probably somewhere going on in your accounts department, your risk management department, or some such area that deals with trying to determine potential loss. Notice that final point on that page. Notice what I said. If you will pay more than X times PX, which is the amount, the dollar value of your potential loss, to get rid of the risk, then you are what we call risk averse. Risk averse people are those persons who will do everything not to suffer any loss, if that's possible. They don't like to take risks. Period. There are some people who love to take risks. But if you're prepared to pay to cover your loss, potentially, you don't like risk. Okay? And notice the difference between your potential loss and the amount you're prepared to pay to cover that loss is what we call a premium, better known as a risk premium. So we're prepared to pay more than the above, more than the required, if we feel it's going to help us to mitigate a particular loss. Okay? That's why we call insurance payments insurance premiums, because we're trying to prevent such a loss for our vehicles, for our homes, and other assets that we have. Okay? So they didn't come up with insurance premiums by accident. It's that extra you're prepared to pay every year, that those bloody high, especially if you own a home. House insurance is a major disaster seemingly everywhere, but certainly we have in the Bahamas, premiums are extremely high for some strange reason. All right. So, more risk. Notice every slide I press, it's some risk. Like we can't, everything is some risk somewhere, some new thing, some potential for loss, something to think about. Okay? Again, we keep coming up with different definitions of risk. We know the end result is loss, but sometimes the road to the end result or potential loss, but sometimes the road to the end result is a very rocky road. So we have all kinds of intermittent definitions along the way, just to kind of see if we can cover all the potential loss perspectives on risk. Okay? So we're told risk has many meanings, many shapes, and many sizes, and I'm afraid that's true. And if you don't believe me, speak with, where is she? Katura. Right, Katura? Katura, are you still there?
I'm here, right.
Sorry, your example was so very real. That's my point. And so very common. You're not alone. Don't think you're the only person who gets caught with that. People get caught with that all the time. Okay? If that's any bloody consolation.
It's
People,
not, but thank
no,
you.
I know. People be flicking trust. That's worse. Anyway, many shapes, Katura, and many sizes, see, which include people we trust. That's why the thing said, didn't say in people we trust. What does the American thing say? Not in people we trust. It says what? Anyone?
In God.
Yeah. Capital G too, no small g.
No.
Don't trust in no small g. But you can trust in small g and try and mitigate that risk. I'm going with capital G. Okay? That small g is spooky too. Okay? So yes, and there's a reason why. Not in people or small g. You see, many shapes and sizes. And sometimes it's hard to distinguish. We try to say, okay, what risk is pure, what is speculative, what is objective, what is subjective. You come up with all these academic explanations to try to fight against risk. And sometimes we're successful, and other times we get caught in through just some of the basic things we do or don't do. So this thing is like, every time you try to avoid it, shake it off, it just keeps rearing its ugly head. See? like I said at the beginning, in all shapes and sizes. All right, so let's take a moment then. We've seen some so far, and you guys have given an unbelievably great set of examples for anyone in this class who may have been listening to just ponder, because anybody can be a victim for sure. Okay? So let's take a moment then and talk about some of the risks that are in the organizations you work for, whether you're responsible for them or not, whether you feel them directly or not. All right, two key risks that every organizations are faced with constantly: financial risk and operating risks. Wow. Notice the note under financial risk, the use of borrowed funds. We heard some examples earlier about that. And the operating risk, for example, the one given here, has to do with the assets, other assets of the firm other than cash. And we're going to see in a moment how these two types of risk can affect any type of entity, financial or otherwise. Okay. Notice more stuff for risk again. You'd think after all that shapes and sizes thing we'd be done. Well, you're never done with risk. That's the problem. Okay? It continues to hang around. Okay? Man, let me see, my wife is here. I don't see her. Okay. I've been married for many, many decades, and sometimes my wife would come out and she'd have on like these little pom-pom shorts. I'm like, why do you have on pom-pom shorts? And she'd say, so? Because I feel like it. I'm like, okay. You're trying to tie me up again. And she's like, not really. And then I discovered why she did. And I'm like, that chick was mitigating against risk, even with like, so what am I saying? Just when you think that you're seeing all forms and shapes and sizes of risk, look at another long list on that same page. Risk is, risk is, risk is, risk is, risk is. Man, that's spooky. And all of these expressions, again, are very relevant. Okay? Notice, risk is unwanted, uncertain events. We all know that. Risk is expected loss. Couture, kiss my foot. In Couture's case, her expected loss became a reality, like so many thousands of people. Okay? Risk is the probability of potential loss in terms of how much you expect to lose, or hope to lose, or hope not to lose. Risk is what are the potential outcomes in terms of any given situation? Is it going to be in our benefit or not? And then, of course, risk is exposure to threat or threats. So, just when we think we've seen every bloody definition of risk, there's more. And all of these are relevant. You can't say, well, it's a waste of time, or a waste of paper. It's not. They're all relevant. Okay? And if you look at this fulcrum, notice on one side of the fulcrum, we have financial risk. On the other side, we have business risk. In each case, there's uncertainty. And we're going from left to right, trying to balance it so that none of them fall off the edge, God forbid. Some firms are successful, others are not so successful. Some of them just suffer significant losses. Others actually end up closing their doors for good. And oftentimes, and most times, it's because of how they manage or mismanage their business or financial risk, or both. So these are very real issues. Major financial institutions are so big that they can suffer losses in these areas and still continue on. But if you check their bottom lines and find out oftentimes how much they have to write off, because zillions of dollars every year because of poor financial and business decisions. Took some risks they shouldn't have taken. Ended up in a pandemic, whatever the case might be. The result is loss. And depending on the size and type of entity you have, you can overcome those loss, write them off and move on. Others are not so fortunate. They have to close their doors, most times for good. Okay? So risk is not your friend. Risk is the enemy. Unless, of course, in very few instances, there are some risks that you can see, controlled risk, calculated risks. Those kinds of risks you do deliberately. Okay? Most other risks, you take a deliberate step towards mitigating and reducing them to some minimum. Okay? For sure. There are certain risks that we don't take them calculated. Right? We don't achieve a whole lot of things we wish to achieve, but they have to be sensible. The other kinds of stuff that just simply rip entities and individuals apart, they're the ones that we're talking about that we're constantly seeking to mitigate, constantly. Okay? So what are the components of risk? Well, I have found 4 of them. I'm sure there are others, but I thought these 4 were probably some of the more key components of risk. 1, it is a threat. It is a threat that we know by now can cause anywhere from simple to serious loss. Simple to serious loss. The other component is resources. Resources are those assets and important things in an individual or an organization that are affected by the threat, which leads to a loss, in part or in full. Okay? The third component are what we call modifying features. These are the things that can increase or decrease the threat, which are a threat to the resources, which are a threat to creating losses. So you see this thing goes backwards all the way back to loss. In each case, we go back to loss. And then finally, we have consequences. This component deals with the extent to which the threat could impact the resources through modifying features which increase or decrease the threat, to creating an effect on those resources which could suffer loss as a result of that threat. So these components, all of a sudden, they are not singular. They are intermittent. They are attached to each other's hip, because whatever happens to one impacts the other in some form or another. And at the end of the day, what do we experience as an entity or individual? Loss. Someone that we trust could be a threat. A client who comes in with some kind of story about something to get you to do a transaction you shouldn't do can result in a loss of resources. Okay? So it's important that however we look at the issue of risk, of course, we're not walking around with all these academic things necessarily plunging our minds every day. But when we put them all in perspective, we can see that for what it's worth, it's important to at least be considering some of the key stuff from day to day as we do our jobs. Sure. And depending on where we are in the organization and our responsibilities in the organization, particularly in the risk and compliance area and at the board level, these kinds of components, issues, definitions, and all the other things we've talked about so far should be constant issues that we're discussing. Most persons down the line are so busy dealing with the normal day-to-day stuff, they may not necessarily be thinking about it this way. But certainly when you get to risk management, compliance, and the board and senior management, these things should be on their lips all the time. And when they're finished discussing them, they should pass down any decisions down the line so everybody is on the same page. Okay? And we don't end up like this guy. Can somebody tell me what the risk is that this guy is taking? This guy on the road, what risk is he taking? He runs the risk of what? What's the
Missing
threat?
step and falling.
Yeah, the threat is he can fall.
Mm-hmm.
Now, all right. So that's the threat. If he falls, I'm going back to the components now. What resources are affected by that threat? If any. The most important of all, him,
His life.
skill, his life. Absolutely. In case you didn't know it, life is a resource. It's the most important resource. See? Even though for some strange reason, we've stopped thinking about it that way. That life is the most important resource. Just like employees are the most important resource inside the firm. The only reason why the firms around the world treat people like dirt sometimes is because they have other people who will do the job. But that doesn't mean that the employee is not the most important person in the firm. You still are. But of course, the firm is so this and that. Sometimes they give the impression like you are not, like you are just an appendage. We don't really need you if you get on our nerves. Well, maybe not you in particular, but certainly employees in general. Okay, for sure. So if he falls down based on that threat, then the threat is real and the resources are lost. Are there any modifying features in that picture? Anyone? Remember we said what are modifying features?
Yes,
What are they? What is it?
the pillow or cushion.
Yeah, the cushion underneath. So this guy looks like he's thought about everything, doesn't he? He's thought about the threat, the impact on resources, created a modifying picture by putting, hey, put the cushion under me in case I fall. Smart guy. What about consequences? The last component. To what extent can the threat impact the resource? Despite the modifying features here. If it looks a little tricky, that's okay, because analyzing risk issues are always tricky. Or not tricky, just something like, what the hell now? What are the consequences here? And if you're thinking about it, that's okay, because that's what we're supposed to be doing, which is one of the reasons why firms oftentimes do not go through these kinds of exercises for each of their risk area issues, because they don't want to go through all that brainstorming, thinking about it, trying to come up with what's the problems are, what the solution. Man, you have to go home. So, what are the consequences? We have the modifying features of the pillow. What is the extent to which the stress could impact the resources? Well, we already said it. It's kind of connected. The guy could miss the pillow. The person could move the pillow. See? How about that? Who thought about that? Yeah.
Mhm.
The person might say, I wanted this dude dead a long time ago. I'm glad he asked me to flicking hold the pillow. Because when he slips, I'm moving it. So sometimes, even though you take steps to mitigate, other things work against your mitigation steps. My. Welcome to the real discussion about risk. In case you thought you may have heard one before. Okay. Like the old people used to say back in the day, can't say I ain't tell you know. Anybody ever heard that expression? No?
Yeah.
Yeah. Okay. Let me see who said yes. That means you dated yourself. Nikita? Nikita, where the hell would you have heard that expression? Nikita.
Grandparents, grandmother, especially.
Yeah, that's true. Grandmothers especially. Absolutely. You one of the lucky ones who had a grandmother that you heard say, because that means that's the good old school stuff. They are definitely major risk mitigators. Because I don't know about you guys, but my grandparents had some rules that were definite. They don't know anything about these components, all this crap we talk about. Not crap, you know what I mean? But they sure as hell had some risk mitigators. Like when they sent me to the food store to buy something, what would they say? I'm going to spit for you. Anybody heard that?
Yep. Be back before it dries up.
Yeah, before it dries up. What does that mean, anyone? What does that metaphor mean?
Don't
You
take
get
long.
it, don't take long.
No, don't stop by no company. Don't hang
Mm.
around. Don't wander off. Don't do anything other than what we told you, or else. Let me see which modifying component that is. Consequences number 4. Cut him. And you're gonna tell me they didn't have any risk issue mitigating it? They did. And I don't know about you guys, but it sure as hell worked for me. And I applied it to my sons in a modern environment, and it sure as hell is working for them so far. So there's something to be said about that old school doggone risk mitigating thing. I'll spit for you. My. All right. So all of a sudden, that guy in the pillow, over the pillow walking the thing is connected to the components of risk. But you wouldn't see the connection unless you see the connection, or now you've been introduced to the connection. Because just initially, it doesn't even look like they're connected until you connect it. Welcome to risk issues. Same thing with risk. Sometimes it doesn't look like it's connected until it's connected, or until it occurs. Okay. Interesting. I hope that's a friend holding the pillow. Sometimes a trusted person, Katira, see, holding the pillow. Sorry, I'm just picking on Katira because her example is so real, so relevant, and so common. Happens every single day to someone. Okay? And if there's any consolation in amounts of money, probably 10,000 times more than what Katira lost. Even though to her it may as well be, because who wants it? I can see like that. That's my kids say. All right. So what are the business risk issues? Well, there are quite a few of them actually. I see a long list of, man, it goes on and on, 2 pages, 2 slides. And these are not exhaustive. These are just some of the key ones that I pulled out to titillate your mind about what kinds of business risks are in your environment. A lot of them. Technical business risks. In other words, you're introducing that new software. Nobody knows how it works. All kinds of crap goes down to learn it, implement it. People accounts that get affected, get lost. The balance is not the same. Somebody steals the money in between, put the new balance minus the amount they took. All kinds of problems. Technical risks. Anytime you have any kind of new process going on and people are not familiar with it yet, it creates a technical risk all the time. Social risk. People, clients, customers change their tastes and desires and requirements for services that are offered. So you may have had a client with you for a long time, for example, but because they have a change in social status, they've gone from a regular person who earns $40,000 a year to winning the lottery or something, a lot of money at these things we have in Nassau. And so now they have much more money than they used to have. And suddenly they don't want to be your client anymore. They want to move on to another kind of individual or institution to do business with. Because now you are quote unquote below their economic situation. And so they switch because people have changing preferences for whatever reason. Okay. Persons like at NIB right now. What's happening at NIB? Anybody knows? What's happening at NIB that's a business risk? I'm the only one who knows?
Yeah, fill us in.
Kiss my foot. Okay, I need to charge a fee for this information then. Well, I understand that the management people at NIB is getting ready to strike. And strikes are part of the social business risk that companies face all the time, those who have unions. And they're getting ready to strike because they said they worked their butts off during the pandemic to serve you people, the Bahamian people, and they now want to become compensated for that. Should they be?
They
Did
should.
they work like overtime, or they actually had to work and do their job,
Good
which
question. Good.
they are so used to. Honestly, they are so used to slackness. Some of them, if they have to work a little extra, I I don't know, but I understand that during the
I agree with you.
I would like to rebut that because as bankers during the pandemic, most of us got a little thing on the side for doing our job. We didn't go above or beyond. Some call it the COVID pay. I know most banks gave their employees a little something extra, a little supplement.
oh,
Right.
that's good.
And that wasn't because they worked extra hours, because most of the banks had reduced hours.
Correct.
So that's for them, I guess, still being on the front line during the pandemic. They
Yeah.
were recognized for that. So that is why I'm saying with the NIB workers, we although they're part of the government of the arms and the perception or the reality of government employees, I still think they should receive. I don't know anybody who works for government, by the way, so I'm not taking up anyone. I'm just saying, based on what we got, being in the private sector, I think they should be rewarded.
So if they get rewarded, should everybody across the board be rewarded?
Everybody should be
That's
rewarded.
that's up to the
Exactly.
organization.
Because
But
the
not-
nurses and stuff had this. I mean, come on, you weren't even taking. You talk about they were in the front line. You weren't even taking care of the
Mhm.
doctors and the nurses. You talk about NIB. I mean, I'm sorry. I don't know. Somebody might work there. I don't know.
I worked at a food store company and we stayed open through it all. We came to work every day. We had to shop and do other stuff like all of our customers, and we haven't been compensated for that.
No, a lot of
And I
people
work
have
for
not been
private sector.
compensated. Yeah, of course. A lot of people have not been compensated. And
No.
those who've been having a party during the pandemic, answer the phone when they want to work from home in their pajamas and negligees or whatever. They were whatever. I'll come to work. I'll come to work anytime with a fan around, that kind of stuff, looking busy. I'm not saying they were not working, but I don't know if it was all that much of a strain for them. I don't think so. Especially places like NIB, BEC. You can't find anybody at BEC. They
No,
never
right.
answer the phone.
No.
And those different places, they never.
NIB is worse, and that's even pre the pandemic.
Of course,
Never gotten through to certain departments.
of course.
That's my point.
Could never get a response from them. So
NIB is just awful straight across the board. I mean, I just don't. I don't know. I don't want to put them in a box,
No, well,
but
they're in the same box as BPL. The most spoiled
And
entity
BTC.
in the Bahamas. Well, I'm getting to that. The most spoiled entity in the Commonwealth of the Bahamas for decades has been BEC, followed by before NIB, NIB, followed by BTC before the other people outside took some of the, so they're not as bad anymore because they're now subject to Tingham and Tingham them in part. But BEC and NIB, unless somebody throws a noose around that whole thing, and my God, they continue to take everything for granted while productivity. I'm not saying they're not working, they're getting some things done, but it isn't all that and a piece of cake.
exactly.
Not to mention the poor service and the terrible, stinky attitudes of the
yes.
other average person in both of those places.
You forgot to
Both-
mention
Mr. Wilkinson, road traffic.
Let's not go
Oh,
there.
Jesus, let's not go there.
That's my
God.
5 cents, sorry.
Road traffic. Forget it. Okay? And why these entities have been allowed to persist like this for decades, from Sir Lyndon's time,
Mhm.
it's nothing new. I'm telling you, I was around then too.
Mhm.
Is beyond me. And they all have this attitude. If you get us mad, we won't send your pension check on time. If you get us mad, we'll turn off your stinking lights. If you
Like
get
they're
us
doing
mad,
you a favor.
they're holding the country hostage from
Yeah.
one decade to the next,
Mhm.
playing politics. Anyway,
No accountability. None.
see, we in a risk class, aren't we, students? These are all business risks issues. The social side of it. My. In case you didn't make that connection. That's very relevant. And it doesn't seem that there'll be any change in my lifetime as I approach my golden years. It's the same. Looks like I'm going to be either retire in woe or drop dead, whichever comes first, and leave it the same way I met it when I was a youngster with an afro. I wouldn't tell you how many decades already. My. And all of this stuff falls under business risks, whether we care to say so or not. Which is why it's important to sit down and really look at things in some detail, which is why many boards and management and other people don't do it. Because once you do it, then you start getting into a conversation like the one we're having. And who the hell wants that conversation? No one. Because we want to continue to do whatever we feel like, which creates all kind of other risk and potential loss every year. Imagine the productivity losses and other losses and scams and collusions and other stuff that all those entities who are threatening everybody get away with that are never discovered. And if discovered, pushed under the
Rug.
kiss my foot. These are all business risks. And everything we've said so far are the consequences of those risks. And the only reason why they survive is because they fall under the government scope. And who supports it under the government scopes? Taxpayers. True or false?
True.
True. It's an unfortunate truth. It's spooky. We don't even like to talk about it. Stinky. But it is part of business risk. And since this is a risk session, it would be remiss not to mention it. It would be remiss not to connect it to our local environment and to try to presume that this is only something that happens where externally. It is not. All of these things are real and all of them are here in the Commonwealth as well. Then there's only two risks so far. All of that crap is only two business risks. That's how deep these business risks are. All that big breakdown, all those problems that still persist, that's only two, technical and social. Imagine that. But what is interesting though is as we drive around and do our stuff, it doesn't seem as if any of those things exist. Because people are oblivious or uncaring or just ignorant about it. And who's not any of those things is just not dealing with it. Head in the sand. And anybody who bothers to take your head in the sand and raise it, then they hold your head in the sand because they want you to shut the hell up. My. Is shutting the hell up a risk issue as well? Anyone? Shutting up about not saying anything about something that needs to be said. Is that a risk?
Yes.
Yes, definitely.
Every single time.
Mhm.
It's like your child bringing home something that they stole and you shut up.
Mhm.
See? What risk are you running? That they will continue to steal and either eventually end up in prison or dead.
Yeah.
See, that's my point. Same applies with companies and anything else. My. Okay, number 3. Another business risk that we have to consider is economic risk. What are they? Inflation, which we have now. How much is gas again?
618.
Now, is that real inflation or that's just them making money? Which one is it?
690.
Is
Oh,
that
so-
real or is that just them making money? Which one is it?
Stop making money.
Thank you, Ernst. Doggone it. I don't think all of it is real. I don't mind being wrong. I stand to be corrected. I run the risk of being rebuked. See, risk again. However, while it might be possible, it's interesting that we went from $5.30 to $7 almost overnight. Where are all those stocks that were in there before 4 weeks ago? Where did they go all of a sudden? Why aren't we enjoying the price of those shipments that came in?
Can I
How the
interject,
heck?
Mr. Wilkinson?
Yes.
I work.
Yeah,
for
please
them.
interrupt me before I have a bloody attack. Thank
I
you very
work for
much.
a food store industry, and you would hear people say the price has gone up, and you would think that okay, we changed the prices based on profit and all that, but it is true. And since the pandemic, a lot of things, because we import just about everything or mostly everything, the prices went up. They did go up. And so that's why I would say with the gas and the inflation, I would think it's real. And that's just because of what's going on, I guess, in the world around us, and everybody is experiencing it.
Which is interesting. Thank you so much, Shakira, because I'm glad you mentioned it from another economic business entity perspective. Now, as far as I'm aware, there's only one major war going on at the moment, true or false?
True.
Is that war in North America?
No.
Is it in Europe?
Yeah.
Yeah, one section. China,
No.
India,
No.
Africa,
No.
South America,
No.
failure.
Mm-mm.
Oh, okay. So, if that is the case, while I appreciate the economic consequences of war, we have a little itsy bitsy war going on in one country. Why has the world been turned upside down? Because there's a little itsy bitsy war going on in one country.
But that is my point. The inflation just it probably
It
just
just
started
happened.
happening with the oil, with gasoline, but with growth, with food items and pharmaceutical items, these inflation's been going on even before the pandemic. But they just didn't, society, or I should say the government didn't pay, or they didn't bring that to, like, brought it to an attention where everybody's focused on it only now because of the war. But
Now,
I work in the industry where we've seen prices go up from before, like before this war even started.
indeed,
I agree with her.
indeed. Why are they going up?
There was, like she said, there was a supply
supply.
issues
Yeah.
from a lot of things came from China. So they experienced a lot of supply chain issues. There were issues with the trucking industry.
Correct.
There were a lot of things going on. Everything getting blamed on COVID though. But I
Everything.
still
But is it really all COVID's fault?
I don't think we
Doesn't inflation go up every year? I mean, there's a real price index increase every year, right?
Folks,
yeah, but we hadn't
That's nothing
watched
new.
hyperinflation though. Like this is ridiculous. You been to the States lately?
No.
You
well,
It's almost-
well, let me tell you a little secret about inflation. Inflation is generally the increasing in prices period over period. What causes increases? Demand.
demand, right?
Whenever we demand more, suppliers increase prices. That is a fundamental economic position.
Mm-hmm.
Now, so we could cut prices by demanding less, but we don't. And remember, during the pandemic, especially in North America, they gave away a lot of
Money, that was gonna be my next question,
Which
isn't it? Because
means
we're printing
that
more money as
they
well.
they
Isn't
fueled
it because more
inflation.
money in the system?
Yeah,
That's another aspect as well.
they fueled inflation by giving away money, gazillions of dollars. And so
Yeah.
people were not working, but they were still consuming.
That's
And
true.
because of that, not only people, but so was the governments of the countries. And whenever we consume more and demand more, suppliers are going to raise prices because
Mm-hmm.
that's how they get richer and
Yeah.
richer. And since we don't know how to stop demanding stuff we don't even need, they don't know how to stop increasing prices. Did you know
Yeah,
that?
people fighting for tissue.
Yeah.
Well, that's another problem depending on what country you're in. But the truth of the matter is, we could start by reducing expenditure across the board. And if you start reducing, sorry, demand, and we start reducing demand, you'll see that prices will start to go down.
Yeah,
But
but you see what
How-
they started doing? They started putting things in the media like, oh, there's gonna be a food shortage. All right, then, what that
well,
cost?
well,
Mass
remember,
layoffs.
remember that is just hype to get you to demand more and panic.
That's what I'm
And
saying. That's
the
what I'm
more you
saying.
demand, the higher the prices go. There's,
Exactly.
there's no food shortage.
No, but
Uh-huh.
No.
this is what they do. This is what they do to justify everything, and so they can ensure that they make more money. But
Of course.
my friend in this group, her boss don't have no excuse. He's made so much money. He don't have to do this. He could keep those
No.
prices.
Well, eggs gone up to $4.75, by the way, just to let y'all know.
Good thing I don't eat bloody
That's it.
eggs anymore. See, I'm gonna help bring prices down. I
Talk
won't
about
stop
inflation.
buying. How
Just
much is,
yesterday was $2.75. Now it's 4 something, almost 5.
so are the chickens are on strike with the NIB too?
I guess so.
Yes, my little
So my,
chicken.
my question is, how do you change customer behavior when you're giving them free money that they didn't earn or work
You
for? Like,
cannot,
what
because
what's the incentive?
there's no incentive. That's the problem. All right. People can't control themselves under normal conditions. You might giving them money. Man, we are to control normally.
Right?
So yeah, there's no incentive. They
But
cannot stop.
can I say something? That that in economics they call that the Keynesian model, where you try and put money into the supply to stimulate the economy. However, the price of that is exactly what we're talking about, inflation and all that. Governments use it all the time. It's supposed to stimulate the economy so that, hey, you could purchase more, create jobs, all this, but it actually has a counter impact.
It does. The only problem is governments act like they don't know when to stop, but they know. They keep it going for their own reasons. They might
Yeah,
say,
Biden doing too much. He's doing too
oh,
much.
he's one of them. That's why they hated Trump, because Trump did not subscribe to that crazy stuff.
No.
Okay? For sure. He subscribed to go to work and buy only what you need, not wasting money
Exactly.
and doing nonsense. Yes. But see, Biden, the Democrats' plan is to give everybody money, including illegal immigrants. So next election, they will vote for whom?
Them, the Democrat.
So it doesn't
Mhm.
matter if the prices go out the roof. To hell with prices. It's all about politics.
But Mr. Wilkinson, at least the crackheads get the crack pipes.
Yeah. Yes. It flicking stinks. Okay. So welcome. And these are all, notice what heading it is under in our discussion. Part of business risk. The hell eggs doing at 4.75? Are the chickens on strike too? Hell no, they're not. People are messing around, taking advantage of the circumstances and therefore the consumer. And if consumers are smart, we will try to exercise control and show them we have some control too. Stop eating eggs
That's right.
for a month. And I can assure you the prices will go down. Guaranteed. When they throw out a couple of rotten cases of eggs, all of a sudden it go down to what it was,
Exactly.
maybe even less. But the problem is every week we can, I can't live without eggs. I don't care if it's $10 really, then live with the price.
But do you notice that it's mostly bread basket items now are going up and prescription drugs and stuff are going up?
Because poor people demand them most. And when I say poor people, I mean lower to middle income people,
Yes.
okay? Regular people like us and below.
Yep.
Especially below.
And what did I knew they do? Add 10% on top of that.
They knew exactly what they were doing because they know who the major consumers are in that area. And it's
Why
called the
not?
majority. And people in low income areas, brackets, love to eat more than anything else in life.
Eggs and
Folks
butter.
know this. Why would they put the burden on them? Because the burden always ends up on them because they're the great consumers of those things.
Mhm.
See, all of that is still part of what? Business risks. In case you thought like, oh, this is just academia. It is not just academia. It's only academia until you start applying it, which is what we require companies to do when they sit down at the board level instead of talking about who's getting caviar and having fun getting an increase in money, whatever it is, we need to be talking about these kinds of things in firms even. And it doesn't have to be a financial institution. It could be a food store. A food store is a major firm, huge firm, and many others. Same issues arise. Okay? Notice under economic business risk, we only touched one inflation. We got stuck there because that's a very serious thing.
Yep.
Gas is almost $7 in the Bahamas for what? Do you know that 50% of that is government taxes?
Yes.
Do you know if the government reduced the tax on it by 50%, gas will be down again?
That's
But the
what
They're
government
saying,
will
but they're saying that the government
Barbados.
can't interject with that though. They're saying there's nothing the government can do about
folks,
it.
listen to me. Government tax. Let me give you an example. When you go away and when you buy a plane ticket to go away, if your plane ticket is $450, the ticket itself is only $150.
That's up
The
there.
rest are taxes.
Right.
Airport tax, the driving, the driveway tax, the building roof tax, whatever they call it, maintenance tax, whatever they call it.
Airport taxes.
Yes, is more than the bloody ticket.
Mhm.
You don't believe me? Check it the next time when you are. You're not too busy. Like, I just have to
That's true.
fly.
You
Mhm.
talking sense?
The other thing, the same thing occurs in gas taxes. Half of the gas bill in the Bahamas is the government tax. If they reduce it by 25%, our bill will go down instantly. But they don't want to reduce it because it means a reduction in revenue. And the government is not prepared to reduce its revenue. They'd rather reduce yours,
Yeah.
especially the middle class and down. See that gang again.
I
That
think they're trying to eliminate the middle class, so.
and well, no, they're not. They don't want to. Well, they don't mind eliminating the middle class because then everybody just becomes good for what? Voting and nothing else. Hopefully that will not happen. But certainly from middle class and down are the ones who suffer from these indignities.
Yeah.
Okay. Increased tax on bread basket items, not reducing the government rate on gasoline so the prices could come down so Bahamians could pay a little less than the rest of the world, and so on. They can do it. They just refuse to do it.
Maybe we should all start riding bike and carpooling
And then the price will
walking,
go,
and the demand will go down.
of course, because it'll be sitting in the station,
Yeah.
not being sold, right?
Yes.
Of course. But we don't, Bahamians don't like to be uncomfortable, see? And that's what they bank on. Because all we need to do is park our cars,
That's
catch
right.
the bus,
Yes.
ride to work, rent a moped for a couple of weeks while their gasoline sits. How about that?
Yep.
And pile children into something and take them to school. Just for a couple of weeks. But we don't want to be uncomfortable. So we keep following through because we are reliable consumers of gasoline and food, especially food. They can depend on us. All right. And all that is just under the economic risk. That's not the rest in the economic category. Then we have other monsters like competition and the problems connected to that. Monetary and fiscal issues in terms of how the government moves money and tax the population. We just talked about taxes. 10% on what? Bread basket items.
Items.
Why not? Why didn't put 10% on the high-end items that rich people buy
Yep.
and leave the bread basket items what? Tax-free. We have enough problems dealing with the cost of living without taxes. Because some persons there are no taxes, they still don't want to reduce the price. Sometimes, depending on how scrupulous and unscrupulous they might.
Mhm.
My. You youngsters have a time ahead of you. You have my condolences. It's going to be an interesting time going forward. Okay. So those are some of the economic business risks that entities and all entities and individuals are facing these things. Just so we don't sit down to really see them or talk about them in that context. Even the persons responsible for them don't have those discussions. And she sure as hell don't have any webinars to tell you about them, correct?
Correct.
Because why should they educate you know? Remember that word?
Mhm.
You know, that's you people. Because if they educate you more, then you're gonna get pissed off and actually may do something. So you're not gonna see this kind of stuff in a webinar. It won't come from Parliament, will it? Not really. And all the other business persons who benefit from these things, do they talk about the indignities that we suffer as a result? Of course not. Why educate you know? And you are the ones that we want to fleece. Somebody knows that word, fleece?
Yep.
Okie dokie. All right, so we'll take a break from economic. Not that we've exhausted the issue. I just don't want to burden you anymore with it because it's a bloody burden when you start thinking about it for real. See, if you're just drinking wine at some function, that's not real. That's everybody talking nonsense and playing politics.
Mhm.
But if you really sit down and mess with it for real, it has very deep, deep risk wounds and implications. Then we have political risks. See? And these are all business risks. Nationalization, taking over companies that are brought in from international places. They love to do that in India and especially Africa, and perhaps for good reason. Okay. War is part of the political risk. We're seeing that now. All hell has broken loose from one little itsy bitsy stinky war that murdering innocent people who didn't even attack anybody. Now we're all going through some egg because of that. Not to mention the poor people in Ukraine who were living a comfortable life 6 weeks ago, correct?
Correct.
Who the hell did they attack? No one. And the big giant Goliath, flicking just because they could. Now it's created all kinds of political business risks all over the world. Thank God the pandemic has gone back to China. Shanghai is locked down, so something is keeping them busy for a little bit. Otherwise, who knows what the hell they'd be doing? See, political business risk. Sorry for you know. Anybody knows that word, you know? That means you people, according to my grandmother. All right. So are we done with business risk? Let me see. Let me press a button. No. See that? 1, 2, 3, 4, 5 again. Like, do you ever get done with risk? No. It's no wonder nobody stops to talk about it. It's too distressing. But it's also very real. It's not going anywhere. Every now and then I try to say something to somebody who should want to listen. They don't want to listen, look at me funny, like, dude, was you trying to start something? And I'm like, no, this is just part of our landscape. Nobody wants to have that conversation unless it's on their terms, politically, socially, and otherwise, and economically. What the hell are eggs doing up to 475? The flicking chickens on strike too? How about that? They've got to be kidding.
Mr.
Whoever,
Minister, let me upset you just a bit further. I just pulled out my
Please.
receipt. I went to the store on Saturday
piss me off a little bit more.
and my bill is reflecting $6.79 for the eggs.
A dozen
$6.
eggs?
Yes.
You got the organic ones, eh?
No, ma'am.
Organic eggs? What the hell is that?
Not organic.
What the hell is organic eggs?
They were not organic eggs this week.
That's
Regular eggs?
that must be our competition.
No, yeah, I'm not saying it was y'all. I'm not saying it was y'all.
I know, I just saying.
Yeah.
Economic.
You pay, Maud,
Yes.
you paid $6 and how much for eggs?
I only checked the bill when she mentioned the price just now. I didn't realize that it cost that much.
It's a good thing I brought up business risk in the first place.
Yes. And the thing is, I don't eat eggs. And I
So why
just
did you buy it?
bought them for buying them sake.
See, you are contributing to inflation, Maud.
These chicken on strike, man.
Let me just say this, everybody, and I make no apologies. Maud, thank you very much for bringing that example up. It's flicking criminal,
It is.
okay? My question is, who is dealing with it? See, my problem is I'm tired fighting with indecency and wrongdoing. Been doing it from I was a youngster. To whoever might listen, nobody wants to listen, especially if it's not on their terms. But somebody needs to start dealing with these matters. That is criminal. Okay, $6. Maud, stop eating it. But you don't eat eggs.
Well, let me not say I don't eat eggs. I don't like eggs. So this would probably be the second time I bought eggs for the year. And usually I'll eat like 2 out of the crate and throw the rest away at the end of the month.
You know, it's a good thing you bought that because now when this came up in this discussion, you looked at it and we now know that this criminality is real.
Mhm.
It's not even just increased demand, it's just pure criminality.
Yes.
See?
And Mr. Wilkinson, I'm looking at something else and one item costs $39.99. I think I'm going to need to visit that shop and make this return.
$39.99 for what?
For
Organic eggs?
No, this is saying the shrimp. I thought it would cost $13, not saying $39.99.
You need
How
to
many-
send
how-
yours.
Hold up, this our accountant.
No,
This
no,
it.
no, no, no,
Oh.
not the accountant.
This is
What
our
was-
rich classmate.
I see.
No.
What was the question? Somebody said something about an accountant?
Yeah, she was asking, if this is the accountant. No, this is not the accountant,
Who is it?
the banker.
Oh, the banker. Okay. Well,
The rich banker.
No, no.
Which bank
The
you
banker who
work
don't
for?
pay attention.
Which bank you work for now? I apply it.
yeah. Maud,
Yes.
I am convinced more than ever that you probably have wine or something before you go to the food store. Because I don't know how the hell you ended up with those 2 products.
That's because I hate going to the food store so much and I just wanted to be in and out. You know, that kind of.
Mm.
Okay, let me I put an extra couture when I need a loan. Where's Maud on this list? Maud. Okay,
So I make noise, so I go back with this receipt and that bag of shrimp.
I suggest you do.
I
Tell
will.
them you picked it up in error and you'd like to return it. It's
I
not
will.
open, right?
It's not opened.
Then be bold. Go back and make sure it's frozen.
It is. It
Yeah,
is.
like don't take it defrosted. They might think something. Make sure it's
But
frozen.
is that organic? Is that organic shrimp?
No,
or-
it's not. I don't try to eat rich, you know. It's not
Organic or not?
organic.
What is organic shrimp?
That's criminal.
I don't know, whatever cost 35.
I thought I saw $13.
What the hell is organic shrimp?
You better check the package, the price on the package, because the price might be on the package for $13. And guess what?
me tell you-
Whatever the price is, that's what you pay.
Folks, let me tell you something.
That's
When
what
when I got to business risk, I had no idea these realities would have come up tonight. Organic shrimp and organic bloody eggs. I mean, like,
No.
give me a break.
They on strike. They on
I don't
strike.
do organic.
So Maud,
Yes,
make sure it's frozen and take it back tomorrow.
yes, sir.
When
Will
your homework, Maud, is to make sure it's frozen, take it back tomorrow, and when you come to class, why the hell do we have a break anyway next week?
We do?
Easter
they say.
weekend. It's Easter weekend.
Should we break? Well, Easter weekend starts Friday. That's
Friday,
what I'm
yeah.
saying.
Yeah.
So
They
what do you
need
guys
to
want to do?
revise
Do you want to
that.
go straight through or wait?
We could go straight through.
Straight through. Straight through. I need straight through.
If you guys want to go straight through, I'm going to send an email to Miguel. Everybody here send an email to Miguel and say we've all agreed to do class next Thursday. That's it. We don't, if nobody's going to be traveling Thursday night, and even if you are, you just log in. See my point?
Exactly.
Yeah, like if you're traveling to Ukraine next Thursday morning, click in, log in, what somewhere near where the bomb, away from the bombs, and then do the class anyway. Okay, so send an email to Miguel, and so will I. Say we have in class next week. Send us our link. Now, once you send us the link, you can go away, Miguel, if you want to, and we'll have class. That way, we don't have to like wait until the pandemic comes back. We have the next. Okay. So if everybody's on board with that, let's do that. And I'll send him a note, my note tonight when I'm done. So we just go straight through. Why break?
Mhm.
Next thing you know, the organic eggs might be 10. What?
Yes.
Our homework for next week is to return that thing and report back to the class the results of that action, okay? For next Thursday. Please make a note of that. Everybody make a note of that. We expect a response from Maud on whether she was successful or not in that venture. Okay. All right. And that's only the fourth business risk, I think. 1, 2, 3, 4. There are a whole bunch of other ones on the next page. Regulatory business risks. We know all about that. We have a new set of financial services bills that came out recently, the other day, that will now provide for certain other issues with financial institutions. Those of you who have not seen it yet, take a look. Sorry. Production risks, like they say there's supply chain saying we don't have a part from China because they're dealing with the not Wuhan, Shanghai lockdown. The Ukrainians are fighting and they provide something else we need. So there's an in production or whatever the case might be. Suppliers are not supplying as much as they normally would because we normally buy whatever we buy from Ukraine and Russia and all this kind of stuff. So everything has gone up. So these are all to the production business risks that we're currently facing. And that's the reason why everybody's saying that's why prices are out the door. That's not the only reason why prices are out the door before the war and before the pandemic. Those two things simply exacerbated everything, increased demand, free money, and suppliers trying to get richer than they already are. Wow. Marketing risk. You work in marketing, you make forecasting errors, you don't get as much sales as you thought, your expenses are more than you thought. You find out that instead of increasing market share, you lose market share. Is BTC losing market share to that other place?
I hope so.
They are. A lot of people who used to be at BTC are now at Alive, aren't they? Remember, before Alive, everybody had to go where? To BTC. Now, we have a whole gang of persons who are with Alive, and everybody who went to Alive is somebody who left BTC. So they are suffering market share. That's why they say they're trying to improve the operations and become more than they ever was before, which they should have been before. So that when companies like Alive show up, that we're so satisfied with BTC that we don't switch. And Alive has to suffer not increasing market share or shut down. But since BTC was so quote unquote stinky, generally, people say, yay, we're alive. We're now alive. And they move over. But that's one of the business risks that many firms face. Even banks saw some version of that. And so many banks are now advertising in such a way to get clients, new clients, old clients back. They're all marketing risks. Okay? Bring your mortgage over and we'll give you the world. We'll let you marry our daughter, give you a new toaster, a new car, lower interest rate. We'll pay the legal fees. We'll give you the world. And all of that is in order to improve market share. Because over the years, some institutions have lost market share for one reason or another. Financial business risks, another long list. We could spend Thursdays just on each of these. As you can see from our previous discussion, serious stuff. What are some of the financial risks, business risks? Bad debt. I just told you, banks wrote off many millions, something like 50 million, I think, if I'm not mistaken, because of the pandemic and other reasons. Some people use the pandemic not to pay and say it's the pandemic. Did you know that? I'm not paying because of the pandemic, but for some people that's not true. They just lie so that they don't have to pay. How about that? And then some people had real problems. They really couldn't pay because they lost their job. And so many financial institutions had to write them off. Some of the write-off was not pandemic though. Some of the write-off was just bad credit. Some of the write-off was credit they gave to their friends who never paid, politicians who never paid, thing of them who never paid. But nobody talks about them. They just talk about the persons who lost their jobs from the pandemic. But we had bad debts long before the pandemic. Bank of the Bahamas a couple of years ago just wrote off $500 million. Did you know that?
Yep.
And it's now sitting with a place called what? What's the name of the entity that's holding the bad debt that was written off at Bank of the Bahamas? It's called Resolve. Anybody ever heard about Resolve? No? Anybody in this room ever heard about Resolve? My. Well, when Bank of the Bahamas wrote off $500 million in bad debt a couple of years ago, not too long ago, it was placed in an entity called Resolve, who was given the responsibility to try to collect the money. And they'll be doing that until thy kingdom come, unless they write off some. But that's another long story that I've been talking about as a young banker a long time ago, when I was slim and my hair was black and all that crazy stuff. And they looked at me as if I've lost my mind. How the hell? This is a question for anybody in this class. Remember, this is a risk class. Credit risk as well included. Credit risk. See? Right under financial, availability and cost of credit, loss, and so on. Credit risk. How the hell does a bank in the Bahamas, a bank in the Bahamas like Bank of the Bahamas, write off $500 million? Folks, I didn't say several million, 10 million, 30 million, 100 million. I said $500 million. Does anybody have any idea how much $500 million is? It's not 100 million or 200 million. It's 500 million. 500 million.
I have a question for you.
Pray tell me. Question.
I know of the situation, right? But what type of loans were they? Because they don't issue mortgages, right? So what type of loans
Yes,
were
they
they?
issue mortgages.
They do.
The
Not that
question is,
many, right?
yes. During
They
that
do.
time, yes. They're not all mortgages. Some of them are commercial loans
Mm-hmm.
given to Tingham and Tingham.
Singam and Tingamy. So you're
And we
saying
know in
half
the
of that
Bahamas, Tingham and the bush ain't got no.
name. So that was mostly mortgages. You say that they wrote off half of it.
Mortgages and commercial business loans.
Okay, I got
Some of them are consumer as well. But for that amount of money, mostly mortgages and or commercial business loans.
Interesting.
Very interesting. When we start talking about financial business risk or any business risk, most half of that or more will never be paid. Unfortunately, they will quietly be written off and result. Let me not go there. See, folks, let me tell you a little secret. Not only have I been around a long time already, I have been a professional retail banker for many years in my life. Scotiabank, no less. One or two others. I have been a financial controller many years of my life. Banking, transportation, hotel. And for the second part of my life, I have been a private banker in all aspects, from compliance all the way up to senior management. All kinds of international institutions, Brazilian, Filipino, French Canadian, Swiss, all this crazy stuff. So I've seen, I dare say, far more than I care to see. But the reason why I told you that is because as a former lender, that situation at the Bank of the Bahamas is total absurdity. To make matters worse, nobody was indicted. Not a soul. We have hungry people in the Bahamas. Question.
Yes, I'm reading up on Resolve.
Yes.
I see that they're a wholly owned government entity.
Which is also the status of Bank of the Bahamas.
Right. And they're saying that their purpose is to get BOB back to the path of profitability.
Well, everybody has a stated purpose, don't they, Ernst?
Right, but the fact that they're government owned, I'm kind of wondering.
The fact that they move
their
it from
purpose.
the Bahamas to resolve. Why? If they're looking to move it back into what? Solvency by collecting the money, then leave it at Bank of the Bahamas and just keep
Correct.
collecting until you collect the hell out of it. See my point? But if you were able to go in and analyze the portfolio, you might discover why, well, what can I say?
All friends and lovers in that portfolio.
Oh, so you guys eyes are beginning to open now.
Along with the
hoping-
student loans. The student loans too. Did they write off the
So
student loans?
the student loans is a whole other nightmare.
Mm-hmm.
Millions down the drain. Some people never even went to university. They wrote the check in the name of the individual who then went off and did whatever they felt like. Did you know that?
Mm-hmm.
They didn't even write the check. A basic rule of lending. Write the check to the insta-flicking institution. Who the hell writes the check to the student or their mommy? Oh, I must be getting old. That's it. I've seen too much. That's it. My. But you know, since we're talking about risk, I would have been remiss not to enlighten you youngsters in some form or fashion along with what you might have already known or been aware of. And what I've said to you, despite all I've said to you, is still only the tip of the iceberg. My. Why the hell would we give away $500 million in capital to Tingham them, who we knew had no intentions of repaying it? Why? And how come nobody was held responsible for it? Anybody has the answer to that? This is a risk class. I'm speaking under the auspices of risk management. My. But if you go tomorrow and steal a loaf of bread from Super Value, what will they do to you? Anyone? Ernst, you're a guy. What will they do to you?
Send me home in handcuffs
Yes,
to my
they
neighborhood.
may let one of the chicks off. Say, oh, she's a girl. She doesn't know what she's doing. But you try it. And they say these flicking fellas keep teething. And then you start crying and said, but I was hungry. And they say, hungry? Boy, we don't care if you was deadened. Remember that word, deadened. You teeth the bread. And how much does bread cost anyone? $3 or something. Yet somebody gave out $500 million in loans and knowing for the most part that it will never be repaid. Financial business risks. My. And then finally, the last business risk is that of operational risk. And again, failure in day-to-day systems and processes, incompetent staff, untrained staff, etc. All of these can contribute to operational risk. Persons who don't have information, like you go to Patel, and you ask the question, who turns the computer on, and they look at you like, turn the computer on? I'm just using it as a flagrant example. Things that folks should know about what they do day to day, they don't know. It creates operational risk. You're asking for me to get the wrong information. Customers get the wrong information because people don't know. They're not up to date. They're not aware. They don't care. Or they just say, I know. In Bahamianese, you don't like it, too bad, leave. These are all operational risk issues. Plus, they can create what? Client issues because we lose customers that way. They say, you don't know? Fine, I'll go with your live. They seem to know. They seem to know and they seem to want to tell you more. Okay? These are all operational risks that create what? Other kinds of risks. Okay? So, and guess what? Students, this list is not exhaustive, but it sure as hell pretty comprehensive. Covers a whole lot of key risk issues that require management on a daily basis. Some of them are being managed, some of them are being mismanaged, some of them are not being managed at all, and some of them nobody even wants to discuss for the purpose of being managed. So you youngsters have a lot of interesting things ahead of you, in case you didn't know. All right. So those are the business risks. You'd think after all that, we'd be done. Well, we're not. Because risk seems never ending. So now, just when you're getting into some discussion about your business risks, simultaneously, we have what? Financial risks as well. And what falls under financial risk? The same old suspects. Credit risk, liquidity risk, reinvestment risk, and last but not least in this category, market risk. Then sub-items, price and commodity risk, interest rate risk. Let's see if there's any more for the record. Ah, thank God. That list is not exhaustive, but they're the key ones that create financial risk nightmares. Just like the business risk nightmares. Eggs, $6 and something cents. Gas, it's almost $7. Shrimp, what is it more? Shrimp?
Yeah, sure.
39. And
$39.99.
and it probably only has about 7.5 pieces in it or something.
No, child, I ain't even look because I fling that in the freezer.
Good. So tomorrow, yeah, grab it and drive straight there. Tell them, there's my receipt. I haven't opened it. I'd like to return it. I cannot wait to hear what the verdict will be next week, Maud. I cannot wait to hear. I don't know about the rest of you guys, but I'm waiting for the shrimp report. Okay?
You're trying to set me up.
I know. I'm setting you up. But if you are bold enough to do it, Maud, you might find out some interesting things about a lot of interesting things just in that little exercise. Rest assured, whatever it is, next week I expect a full report. I don't know about your
My
colleagues.
friend Super Value could tell me about the return policy.
Okay, super
So
value.
it is, so it is super value?
No, it's not Super Value.
Well,
But if
our
you get,
return
It's the
policy,
competition.
yeah,
or the competition. Well,
what's your
our
return policy?
policy, you can bring it back as once you have the receipt, and like Mr. Wilkinson said, it's unopened and it didn't look like you tried to cook one and close it back up.
Exactly.
Okay, I straight then.
Yeah, you
Now,
can straight.
now, Maud, now
Yes.
you are armed with relevant information.
Yes.
So now you have just mitigated the risk of being put off by a percentage unknown even to you. You have
Exactly.
information now. So when you
Mhm.
go to the competition and they give you some off the wall story, then you say, no, no, no.
Then
I
you can
spoke
shop
with the
and go back
competition.
there. I
You
guarantee
know,
you buying shrimp for $5.99.
And I
my-
thought I was paying $13. I don't want to talk about it. You see, I just got the gumption to look at the receipt from Saturday.
Maud, put on your
So what
glasses. Are you
Saturday
sure
again?
it's 39?
Pardon?
You sure it's 39?
It says $39.99.
That's the
You better put that receipt in your bag so you don't lose it. That's serious. Take that back in the morning before you go to work. Not kidding. Don't wait until lunchtime.
Oh Lord, no, I can't wait because it'll be thought out.
That's my point. So make sure it's frozen hard. And on your way to work, stop there.
But more, they might have a return policy where only within a certain time frame you can return
That's
that.
why I asked, let me see the policy to the bottom here.
I could only
Yeah,
see the
It
Yeah.
says within 14 days. Yeah, it says items must be returned within 14 days.
That's on the receipt.
Yes.
Man, you learn so many things when you just talk. I never even knew that they had that written on the, they're bold enough to put it on the receipt,
Yeah, we put,
Yes.
yeah, you put them on the receipt.
but they don't tell you
Does
about
it
it
say
if you don't
cash
read it.
refund? Does it say
It,
cash?
no, it starts saying no cash refunds, exchanges, or assault credit with proof of purchase.
No
Items
problem.
must-
So,
Items
so,
must be
so,
returned within 14 days, intact, except under warranty. No
Good.
exchange accepted on undergarments, swimsuits, or clearance items. Some restrictions apply on perishable and grocery items. See store manager.
That's all I mean. Okay.
no, so Maud, you straight, take it in the morning, sealed, frozen, and tell them you don't need cash. Make your list tonight, that makes up $39. And just don't make sure you have any $6 eggs in there.
No, I wouldn't need eggs until I see Christmas.
I can't wait until next Thursday. The anticipation is too much. That bloody shrimp. Okay. So, financial risks, liquidity risk. We talked about it a little bit at the beginning. The risk of not having sufficient funds that affects all of us, companies and individuals, running out of money, then have to use money from Peter to pay Paul and all this kind of stuff. Companies fight for liquidity all the time. That's why they need overdrafts. Some of them abuse the overdrafts because of liquidity problems. Some know how to use overdrafts effectively to deal with liquidity. But the real issue is the risk of running out of enough money to pay your bills when they're due. That's the point. And that happens from multi-million, billion-dollar entities all the way down to maybe even mom and pop shops, depending on the situation. Liquidity risk. Okay. Credit risk, we talked about the fact that customers will default and not pay you back is a major problem for persons who lend money in any capacity. These are real. Interest rate risks, fluctuations in rates. Rates are too high, rates are too low. Some people say, how could rates be too low? Well, if you have a mortgage, it can't ever be too low, or any kind of loan. But if they're not paying sufficient on your fixed deposit, then it could be too low. Because I understand that some financial institutions are paying less than 1% on fixed deposits now for some reason.
Mhm.
That's not criminal?
Yes, it is.
Why is it don't we pass a law saying that you cannot go below 2%? Because,
Mhm.
see, there's political risk too somewhere.
Yeah, who's bold enough to do that?
Who's bold enough to do that in Parliament
Mhm.
on behalf of whom? Poor Bahamians again. See my point? Has anybody tried saving $5,000 lately? Maybe for some of us it's nothing, but for the average person, saving $5,000 is a big freaking deal. True or false? Especially if you have children. Like every time you save 700, the car breaks down. Get to 1,000, somebody gets sick. Get to 1,500, mommy needs it. You get to 2,000, someone else explodes. Whatever. So for some people, saving $5,000 is a big deal, even in their entire lifetime sometimes, depending. So let's say you finally get to $5,000 and the interest rate is 0.0000 nothing. Isn't that criminal? Or is it just me? Something isn't right there. How could you be charging interest for loans up to 10 and 15% and have the audacity to say you're paying less than 1% on deposits of any kind? Am I the only one who's aware of that? Am I the only genius in the room?
What's that?
Don't
Fine.
they need central bank approval to decrease the rate? So I'm confused.
Oh, let me see who said that. Who's confused? Oh,
Lewis.
yes, Miss Lewis. Here's what I'm saying. Certain financial institutions, banks, they are charging less than 1% interest on deposits, whether it's savings or CDs.
Mhm.
However, when they give loans to the same persons they're paying less than 1% to, the interest rates are anywhere from 6 to 15%.
But aren't they regulated? So any interest rate changes has to be approved by the regulator or no?
The banks still need approval to pay a decent rate on your deposit.
They don't?
No, they don't
Is it
at
just
all.
mortgages?
No, mortgage rates are somewhere between 4 and 6 or 7%, in some cases 8%. Consumer loans can go up to 12 to 14%. But
Yeah.
if you open a CD or savings account, they're gonna pay you less than 1%.
Not at my bank.
I know, but at Tingham Bank. So folks are now moving to your bank and credit unions.
Yep.
Which bank is that?
Nikita,
Fidelity.
which bank is that?
Oh, yes, Fidelity. Yeah, love them.
So the Fidelity is paying what rate on, say, deposits now, average?
1.752%.
Okay, that's better than nothing. It is
Compare-
not fabulous, but compared to Tingham now,
No. 0.25%.
yeah, 0.25%, less
Yes.
than 0.5%.
Yeah.
Man, that has to be criminal, and nobody's saying anything about it because they're afraid to confront the fine. So,
And Mr. Wilkinson, for one of our clients, we needed to terminate a fixed deposit early. They wanted to penalize us 2%. I said, we're only getting 0.3%. So how are you going to charge us 2%?
exactly, criminal.
Argue that.
That's my point. And I think it's time for our leaders to stop having caviar with the banking heads and call a meeting to discuss the real issues. Well, I'm saying that under the auspices of risk management, because it's all part of risk management, but nobody seems like they want to do that. You know, sometime back in the day, somebody had the audacity to ask me, Mr. Wilkinson, you thought about running for parliament? I'm like, no. And they said, really? You would make a great parliamentarian? I said, I know. They said, well, why wouldn't you do it? I said, well, because the way that I would want to do things, I wouldn't last as long as Paddy lasts, as my grandma said, in the army. And if anybody knows about Paddy, as soon as he randomly got shot, instantly didn't make it 2 steps. Okay, like so many of those poor soldiers. But my point is, see, I'm going to be the guy that's going to raise that, and then nobody's going to like me, and then they plan against me, and then they kick me out of parliament even, or don't give me a nomination next time. Whatever it is, people do, just for trying to do the right thing, because raising that question is the right thing. How the hell are you going to penalize them 2% and you only pay point how much? 0.3. There has to be an element of criminality there somewhere.
Yeah, that is criminal.
And if it isn't criminal, it's flicking immoral. And if it isn't immoral, it's unethical. And if it isn't that, it's all of the above. How's that? I say, oh, that Wilkinson boy. But that's how I've always been. Because it is so blatantly clear. You don't need to be a genius to see that they're taking advantage of poor people. See, poor people again. Because rich people and other persons don't have that problem for one reason or another. If only for the fact that they have knowledge of it and what it means in the first place, and they're able to negotiate. But the rest of us, quote unquote, especially those further down the line, God forbid. My. All right. So that's the interest rate issue. So just when you think you're out of the woods with this stuff, there's all kinds of stuff keep popping up. And again, we have discussed these risk management issues at some length and came up with some interesting things in the Commonwealth just in this little session alone. Imagine what the extended realities of all of these issues are for real. My. All right. You know what? You guys have been more than fantastic. I think we'll stop there tonight. And next week, Thursday, when we come back, we'll finish as far as we'll finish. Don't forget to read the case. Look at the questions at the end, make some notes. There's no such thing as a correct answer. We're just going to discuss a couple of the points just to see if you can connect any of these risk issues to that particular unusual case, and then finish up our discussions on risk management and see what other interesting things come up. But as you can see, in 2 short sessions, we have covered a myriad of very serious issues. And these issues don't exist external to the Bahamas. They are right here at home with us on a daily basis. Problem is, those of us who know what to do are not anxious to do it. And the rest of us who know what's going on can't do anything about it. And then the rest of us don't know what the hell is going on. And then the rest of us don't really care. Sorry, that's an interesting spectrum in terms of dealing with the risk management issues in our own environments across the board. All right. So you guys have been amazing. Thank you so much for the examples that you presented and your feedback. I'm sure everything that you've said has been a great help to your colleagues. And I don't know about you guys, but Maud, the first thing I want to hear next week is the result of your return. I don't even want to hear what I have to say first. How's that? All right, so you guys have a safe week and get back in one piece. I'll see you next Thursday. If Miguel tries to put up resistance, tell him we don't want to have to picket the area down on Shirley Street to have our class next week. We're having it. All he needs to do is to put up the link and we'll do what we have to do. Deal?
Okay, thank you.
Excellent. You guys take care. See you next week.
Good night. Good
Good
night,
night,
all.
all.
Good night, everybody.
Bye.
Good night.
All right, take care.